Hey guys, how's everybody doing? Thanks for being here. Sorry I'm late. All right, let's take a look and see what's going on. It's been a long day for me. I was up like at 4 o'clock this morning. I was on Rod's live stream. I wasn't on the live. I was watching his live stream and commenting, of course, as long with probably some of you guys also. And then I kind of committed to have a live stream tonight. So anyway, but SB was going to be here, but he's been in the sun all day, which I understand. So it got too late for him. Something came up, and right about 5 minutes before I was supposed to go on, I tried to hurry, but in any event, I'm going to put a invitation to my Discord in the chat. We invite anyone to join us. We have a good Discord. All right, let's look at the market. See what the old market's doing. Here we have the ES. Boy, I want to tell you something I've been looking at on the ES. I don't know if you guys have, but I would imagine so. But this is something you rarely see, which is a gap in the ES. And I think we have a couple of them, but we have one for sure between last Friday. It was caused by last weekend. Last weekend's melt up. We closed around 56.90 and we opened around 57.37. So 47 handles higher. Never looked back from there. Never looked back. So let's mark that off right now, just so we don't forget that. Boy, if it gets back into that, that'd be a gift, right? If we were still bullish on the market. Really, even if it doesn't get that far, it looks to me like lots of buy the dip opportunities in here, but we'll see what happens. We'll see what happens. It can't go up forever. At some point, it has to revert to the mean. Sometimes it goes up just a little too much, like right here, and reverts to the closest mean. But sometimes it'll revert to 2 or 3 means back. So we saw some of that in late March and early April. All right. Hopefully that's behind us for now, though. All right. So that's the ES. Here's NQ. I guess it's all about Bitcoin, and they're above 100,000. They're swinging in $2,000 increments in an hour, it seems like Bitcoin is. It was at like 105. Then I looked 2 hours later, it's at 102. I mean, that thing's insane. Bitcoin futures. Okay, so but NASDAQ, let's kind of zoom in on this, kind of what more what I care about. Boy, this thing's up. There's also a big open gap in NASDAQ futures. It just didn't, because futures are open 23 hours a day, 5 days a week. They don't gap as much. And so futures gaps are, even more special or whatever. And I was going to say we had another one, and there it is right there. I drew it, but we didn't make it long enough. But it actually, we've already been back into it a few days later, and man, that was a gift. That was a gift. We didn't get a second chance at this one. We may soon, though. All right. There's that. Here's Bitcoin. Now, Bitcoin trades 24/7. The only way it could gap, I guess, is if it had like a real gap where there's more buyers and sellers and the price didn't trade continuously, like a liquidity gap where it skips prices. And I'm sure it can do that. Probably not as much anymore as it used to. Come on. Gosh. But see what I mean? I didn't even know it went up to 108. I was helping my friend. It was back down at 100. Remember I told you it was at 105 and then it was at 103. Well, in the meantime, it went to 107. And then while I was helping my friend, and now we're back at 104.7. My gosh. We're really forming a nice looking distribution right here. All that shows you is the trading range between 101 and 106 or something, 105, 105.50, something like that. the Bitcoin chart doesn't gap, but it has this area where essentially there's very little volume, and that's essentially a gap. And you can see when it got back almost to that one. All right. Let's see. I made some notes here. Let's look at the notes here. Twitter Spaces. Okay. Did anyone see the Twitter Spaces? Somebody in my Discord. It was a big one. Mike Venuto was on. Hey Dan, what's up? It was a Twitter Spaces. I'm not sure when it was from. I think it was from yesterday. And Mike Venuto was on, and it was with a guy named Wolf, and they were Bitcoin people. But anyway, and they were really enthusiastic about MSTY. But it was a cool Spaces. They super enthusiastic, but they were Bitcoin people, not option people. So it was, it just reminded me of a year ago when we first started, because they were all the easy questions they're still trying to get past right now and stuff. But that's fine. I mean, we welcome to the party. I forget, they were saying something. Oh yeah, and it's easy mistake. Here, Dan, I'll give you a quiz. Okay, so they're coming out with a new fund. They're coming out with a new target fund. And it's going to trade Mr. options, but it's only going to pay 25%. So it's going to be like a MSTY target fund, like a MSTY Lite, and MSTY pays what, 75, 80, 100% sometimes. So it'll just pay 25%, keep the rest in NAV. So, so what does that mean? Does that mean, is that fund less risky or more risky? But it's kind of a trick question. But anyway, one of the guys on the Spaces, he said, he was asking Mike Venuto a question. He said, so if it only pays 25%, okay, so you get less of a dividend, but it's less risky. And Mike Venuto had to kind of correct him. He said, well, no, he said, actually, you get less of a dividend, 25% dividend, but then because of you get less of the dividend, you actually have more exposure to the downside. So you'll actually get a little bit more downside than the full MSTY fund, but you'll also get a lot more upside theoretically because you won't be as capped. But anyway, there's a lot of things that we all understand, very simply now. But there are simple concepts that those guys are just getting their heads wrapped around. But once you can get your head wrapped around, when the market drops, volatility generally goes up. That creates a buffer. But anyway, it's good to have everyone on board. But this MSTY thing is incredible. It's just turned into a phenomenon. I saw one of my favorite option bros, and I had a video about this the other day, but Mike Coe from Option Action, a CNBC guy, actually said on Option Action that he bought MSTY, and he's an option guy. He runs his own ETF, so he has all the same qualifications as Jay. He's a market maker. He's been a market maker. He's whatever you have to be to run it to manage an ETF. Anyway, so he can fully do all this kind of stuff himself, but he sees the utility in it and not having to. And it's the first time Big Wall Street's understood it. And I think what really turned the key was Jay and Rod getting Scott Snyder on. And because Scott Snyder evidently also has a really good reputation, which shouldn't surprise us, just like they all do. But anyway, I think that when people realized how big of a trader he was and how long he's been doing it and how talented he is, and that MSTY's his baby, I mean, so it's a really exciting time. What's up, retired cop? Sorry, I felt so bad. SB texted me and just said, I can't wait up anymore. And I felt so bad. I was already kind of mad at my friend. Not really mad, but I was frustrated because that project came up at the last minute. But anyway, it's all good. SB can watch the replay. It's whatever. He's heard all this stuff before. But anyway, I thought that was interesting because it is kind of counterintuitive. If they do come out with a target MSTY fund, it's actually going to be more risky. I mean, and they're going to come out with it. It's already past the 75 days. Venuto couldn't say anything. He was just saying, I can only say we applied for it, but they kept asking for hints. And he can say, well, I can also tell you that it's past the 75 days. So that's the minimum. So they're past the minimum. So it could be any day. Now, it could be tomorrow. It could be Wednesday. I don't know. I'm just looking forward to for the lightning spread one to come out. but I'm kind of disappointed at the same time because the lightning spread one, which is a really cool strategy, which I actually forget. I remember now. It's kind of a synthetic combination strategy, kind of like something I might make up or whatever. But and it performs really well. But I think that's the one they're trying to do a daily pay with. So I want to cover it for the fact of the lightning spread, but the daily pay part of it, anyway, it's fine. Really, daily pay is just a matter of accounting, right? And I've said that a long time ago in Discord. I tried to find a backer. I tried to get Retired Cop and Dan to back me, but I couldn't. But if we could have done that, you just make an ETF. It's just a matter of accounting. Do a covered call ETF. You know how much premium you sell. You probably pay like 2 days before, like whatever premium you sold 2 days before. But so you don't have a payment like till the third day or something. And then you pay from 2 days before. It's just accounting. Boom, boom. Anyway, it would be an extra, accounting expense, but I predicted correctly. I that it is, I lost my train of thought because I got that text, but anyway, all right, let's get on some other stuff. Thanks for being here, Retired Cop. All right, let me show you the max factor, and I'll remember what I was talking about. Gosh darn it. He doesn't know I'm on a live. Let me just text him back. All right. I just don't want this to be right now. All right, guys. Well, let's look at this. Let's look at the MSTY trades. This thing is incredible. Okay, so this thing is absolutely incredible. All right, well, just here's all the trades for the week, but we haven't looked at Fridays yet. So here's Fridays yet. And they had a bunch of them. The ones we're most concerned about are the SS. We aren't concerned about the BCs. Well, BCs we'll keep track of, but the SSs are the ones we're most. That's a new position, selling short. That's selling something that you didn't previously own. So where it looks like we're short the 420 for next week. Yeah, for the 23rd. And then S means something different. S is when you're covering a position. But anyway, SS, okay, we're also short the 430s. And we're also short some 435. We're short all kinds of stuff. Anyway, it doesn't really matter, but the total does. So we bought $61 million worth of stuff. Is that right? Gosh darn it. Let me put it in currency. I'm sorry. We bought $6.1 million worth of stuff, sold $19.5 million worth of stuff. I'll separate them later, but just as far as operating profits or losses go, that was a $13 million profit, which comes to about 2.9 bill. The fund's worth about 4 bills, so 3/4, right? Because it's worth 3 out of 4 is about 75%. Sure enough, 76%. And this should be, sorry about this. This should obviously be percent and not, yeah. But anyway, it was a good day, good week, and so just on the short sales, that comes to 18 mil, 18.2. For some reason, the spreadsheet didn't carry down the yield, but anyway, I'll have that fixed by tomorrow. But yes, suffice to say, it was a good day. So over here, I put all these lines together so you can see the assets under management. They grew from Monday to Friday from 3.6 to 3.8. I'm just trying to load the price here, and I don't know why it won't load the price. It does it on one line, it won't do it on the other. I'm not going to get upset about it. It's no big deal, but it'd be nice. Rod spreadsheets always have the price next to the day. We really don't need the price because the price really doesn't matter for what I'm trying to show. I'm trying to show the yield and what we think we're going to earn on NAV return too, because NAV return comes from trading profits, as we know. Or it could come from, or the yield can come from trading profits too, because sometimes Jay will pay you part of the trading profits in the yield. You guys understand that. But this just aggregates it. So if you look at all these days, we spent 44.8, or Scott spent 44.8 million, but he brought in 77.5. It's 32 million, which comes to 7.1 billion. So that's easy, right? It's a $4 billion fund. So what is that, like 100 and, well, anyway, but that's, I don't think this figured it up right. It didn't. I'll have to fix the spreadsheet, but that comes out right there for the week to more than 100%. The average, just on any given day, average NAV return is coming out to about 50% when it's annualized. I'm not, this is just one day. If you annualized it, just keep track of how it's doing on a, we sold $55 million worth of premium last week. So that's really easy, because at 55 million is what percentage of 4 billion? I don't know. It's like an eighth. So yeah. So anyway, it's really good. It's really good. Let me think about that. So 55 billion, but for a week, we'd have to annualize it. So that would, anyway, and then figure out the yield projection. But just based on the average of the days, it's coming out to around 44%. But Fridays, just on Friday alone, the yield, they could pay 103% based on Friday. Based on the whole week, it's around 44. But Friday they killed it. Scott killed it, bringing in 18 million on a base of whatever, a base of 4 billion. That's just killing it. All right, so let's go to the retirement simulator. We aren't really going to simulate retirement lately. The retirement simulator, I think is cool, but I didn't really use it so much for the returns, because you can get that stuff from Portfolio Visualizer. But I really liked it as a database because it tells you everything you need to know. I've told you before, the retirement simulator, all I did was I took that dividend channel that everyone brings up to compare two ETFs. I took the inputs from that and just put it into a spreadsheet. So basically, the retirement simulator isn't so much simulating retirement anymore as it's modeling momentum is what it's actually doing. So let's look at that. So the spreadsheet is called High Yield TNA, or High Yield Momentum, whatever. And this has all our inputs, and this has the price. I got the price here, but for some reason it was having something to do with the date. I had something messed up with the pulling the historical price. I'll have it fixed soon. In any event, this tells me everything I need to know to generate this, the top 20 max factors, the top 20 max funds, maybe, or yeah, top 20 max funds, MFers, or MFs. And obviously Maxi is just killing it. These numbers mean something. I hate when a metric doesn't mean something. And the number over here is our days. So that's how many days above average it is. So, and that's based on each individual stock's own volatility and its own momentum. But I found a way to equalize them and compare them all against each other. So it's not just they're just compared against each other. So this is the best one. Maxi's the best one in this universe, but there's probably better ones in other universes. All right, so here's all of them. And there's a couple that aren't working for some reason tonight. Dizzo, who cares? But why is it up there so high? Does that not amaze people? It's 2 days above its moving averages, above my proprietary indicator. It has 2 days more momentum compared to the average fund. Let's just say that. Those mean something. The number means something. It's days above or below average. But okay, Maxi number one, no doubt. NFLP, TSLP, what's impressive about those is their curve, and no one ever has curve or talks about them. They have very few assets under management, but they max out the max factor all the time. I've been saying it since since last year. They're usually, especially NFLP. NFLP is perennially on top of the max factor. I used to have a different formula that basically just figured out total return, but you can just look at total return. This formula is novel, and no one else is doing this. This is purely technical, not doesn't look backwards. It doesn't use a moving average crossover or anything. It just compares momentum. All right, so but there's some good ones up here that might surprise. NVDY wouldn't surprise me. That's a great one, and that's the GOAT. It was the GOAT for a long time. DISO surprises me. PLTY, Palty, Platy, whatever, does not surprise me. And neither does SFAL, given how well it's done lately. But, if I wasn't watching this every day, I'm using this. If I wasn't watching SFAL every day and I saw them suddenly go to the top of the chart, this is just kind of to keep our attention on what's hot. Did any of you guys have any SFAL yet? I've got to get me some of that. And now I should have got it about a month ago. But I mean, it looks like a really nice bull market fund because they add convexity on the upside, and they're actively managed. Fact is, I looked into it, and they can do pretty much. They leave themselves some ability to do whatever their managers want within reason. But let's look down here. We never look at the bad ones. Okay, YQQQ, that should be the one. I mean, I would expect that and Fiat to be the worst. But look at USOI, oh my gosh. I mean, look at THTA. They've never had a losing year, but I bet you this year might be one. I mean, this year was the perfect storm. Or I don't know this year, but we'll see how the rest of it finishes up. But, we'll ask Jay about it when he's on, but they're very proud of that fund, and they've used that exact strategy for years. And I just don't get it. I've showed you guys my reservations with it. Look at TLTW. That's great. That's in my portfolio, and so is GDXY. Now, those weren't momentum plays. Those were macro plays. I thought we were going to get interest rates lowered, and I wanted some exposure to bonds. That hasn't worked out so far, but it might still. I don't know. GDXY was at the time I was worried about the market and inflation. I probably need to cut my allocation of that a little bit. But in any event, at least I don't have Murney. Goldie, XOMO's a dog. Or it's not a dog. It's these things are, that's the thing. And this is not a judgment on the quality of the fund. This is a quantitative judgment. This is, this could be the worst fund in the world, or you guys know, it's just, you wouldn't think the worst fund in the world could be at the top, but a fund that's maybe not a great fund for me and maybe doesn't fit my risk tolerances or whatever could maybe something that I don't need, or maybe I already have or something, it could go straight to the top. So just because its underlying asset is hot, but that doesn't mean that it still doesn't mean it's right for me. The other thing is that people also tell you this about momentum strategies is lots of times when you're doing a momentum strategy, if the market whipsaws and you don't get trends that last, you end up buying highs, because wonder if we bought Maxi and then the market, it rolls over. You don't get the momentum. So then in a few weeks later, this thing updates daily. It updates live. So, we'll look at it every week, but then next week it may be Maxi's down here and it's telling you to get something else. But then about the time you get in that, then Maxi comes back and stuff. The technical analysis and just trying to follow whatever's going up is not the be all and end all by itself. I just was getting too out of touch with how well some of these were doing as far as momentum goes, and also with how poorly some were doing as far as momentum goes. Now we can look at it all the time. And I know I have too many on here. I want to have a universe with all of them in here, but I'm also going to make one that just has yield max, and it'll be easier to look at. I'll knock these other ones. I'll still keep doing this, but we'll make just a yield max one. Anyway, I hope you guys like that stuff. Let's see what else we have to talk about. I was thinking maybe some earnings trades. We talked about the 25% target, earnings trades, tasty trade. Let's go look at that real quick. I don't have my model spreadsheet fixed, but we could just look at, I thought it was interesting, these initial prices right here. All right. $8.61 on ULTY. It's at 628 right now. Ooh. All right. I did better on GPTY. 43. I'm right where I'm down 20 cents. Okay. All right. Come on, GPTY. LFGY at 36. I'm down 50 cents. Gosh, LFGY, come on. Now, GDXY, I got it 1538. I'm 1327. MSTY, I got it 21. It's up. It's at 23 almost. 2264. Y Max at 14. It's at 13. Boy, this one's bad. Coney. Yeah, Coney at 11, and it's at 8. Wow. AMSI went from 18 to 14, still at 14. I mean, I like that one. I'm glad I got rid of it. I mean, XYZ or the Square Sky, I had high hopes for that one. Got it at 15. It's at 8. I mean, that one in AMD just killed me. I mean, and that's where I'm hoping the Max Factor will just help me keep an eye on situations like that. We'll just start looking at it every day. We can look at it together. I know you guys look at this stuff more active. I'm just trying to think of an easy way to consolidate it where you can see it pretty fast. All right. Well, NVDY 18, it's just 16. It's still underwater. Remember, I bought these in late December, so it was a terrible time. It was a high for a lot of tech stocks and probably NVIDIA and stuff. Some of them I think have recently, like Palantir's gone back and taken it out, but it was a high for a lot of these. XOMO, who cares? Y-SPY, I got it 21. It's 18. That's kind of disappointing. It kind of surprises me a little bit. Got it 21.45. It's at 18.88. I haven't even had that one that long. It's leveraged. And of course, this isn't total return. I've also got some shares because it's dripping back into the thing, and I'm not able to see that. I'm not factoring that. I'm just looking at the prices. Boy, this one's bad. Feet got a 42. It's a 32. TLTW got a 23. It's a 22. Okay, well, that one is at the bottom of the list, but I'm not in too bad a shape. I'm in a lot worse shape on some other ones. I'm only underwater there 80 cents or something, which isn't that bad. I don't have that many shares either. Dips 1240. It's a 9. Okay, well, that one's lost a bunch of value, of course. Fiat, of course, it's lost value. Got it at 8. It's at 4. Boy, I'm glad I dumped that. It worked for me when I had it. It hedged out some of those down days, that and YQQQ. And then here's my steady YQQQ. It's at 16. And I mean, about at 16, it's at 1377. And that's fine. That's to be expected. That's to be expected. So yeah, I think I need to take some of those allocations down a little bit. Let's see what else I want to talk about. Maybe we'll go look at some earnings stocks. Hasty Trade, MSTY, Max Factor, Twitter Spaces. The Twitter Spaces is good. I'm so glad all this stuff's going mainstream. If you guys have any questions or anything you want to, earnings trade you want to talk about, a question, you anything, it's your show pretty much from here. We'll look at option strat, and then if there's no questions, that's fine. It's Sunday night. It's no big deal. I'll let you go. We'll probably look at these earnings and maybe look at option strat, see, strategize for this week. All right, Zims before the open on Monday, and I haven't done anything about that. And then anyway, that's too bad because that one sometimes has liquid options. I've used that one before. It used to be a lot more expensive. I was going to say it didn't used to be $18. But that one can be a decent one. Trip.com. Yeah, Trip.com could have good. This one, Palo Alto Networks, always has good options. I bet Home Depot's liquid too. What do you guys think about retail? Home Depot, are they going to hit? I mean, Well, what's Nike done? What did Walmart? What are the other ones doing? What did Walmart do last week? Did Walmart hit right? This is probably doing the same thing that those are. Let's see. Somebody just is that an? I don't know. Somebody said something in Discord, but I thought it was anyway. Yeah, Jay Leno's jealous, isn't he? All right. I was trying to make a really good point before my buddy that I was helping texted me, and I told him I'd do this later. And I lost my train of thought. But I was talking about the spaces and Mike Venuto and how smart you guys were. And anyway, we've come a long way. And just in, we take a lot of stuff for granted, I guess is what I was trying to say. You guys understand these funds so thoroughly now. I mean, we hardly ever have any. The stupidest thing that's happened in Discord the other day was when I was griping about ULTY, and I didn't realize it was ex-dividend day, and somebody had to tell me to chill out. It's ex-dividend. Same thing I've told people, a million times before. Anyway, we all know how they work. They aren't Ponzi schemes. They aren't going to zero. Murny might. I mean, the parent company could go to zero, and these could get shut down. Yeah. So let's just also talk odds. So, they've been out 2 years. How many have they lost? I only know of one of Jay's. They probably shut down others, but let's say there's been 10 that have shut down. There's probably 100 out there. It's pretty good odds. Even if they shut down, no one lost money. I mean, you may have lost money because it was a bad investment, but it's not like, well, they shut down, your money's gone. That, it's this. These are liquid. I mean, not Ponzi schemes. May not be a great investment for everybody, but especially for people that need growth. I mean, just because they aren't Ponzi schemes and they aren't going to zero doesn't mean everyone should go get a bunch of them. But anyway, it's just a great time to be an investor. All right. What else are I going to do? Let's look at these. Let's look at option strat. And then if there's no questions, I'm going to go help my buddy. Again, I'm doing a graphic arts thing. I'm messing with the Photoshop. Oh my gosh, it's fine. You think I'm bad at spreadsheets or not? You think I get stressed out at spreadsheets? You ought to see me on Photoshop. I'm actually pretty good at Photoshop though, but Photoshop it can have hassles. It can have its own peculiarities, idiosyncratic things. All right, so let's see what's expiring this week. I kept griping about, I thought the market was going to go down. It doesn't look like it's going to. There's $118 down the tube probably. If the market does go down, I think in a couple of days, this one could be all right. But it was, I believe, it was it was for a black swan, just in case. It was cheap, and it's whatever. Anyway, hopefully it doesn't look like that one's gonna come to pass. This one, I really am still not convinced the market's not just gonna take a real quick pullback, even if it's not gonna, not gonna break trend. It's gonna pull back, right? It's got to pull back. I think it'll pull back early this week. So this trade right here aims for just a little pullback. And it's not like black swan. It won't make you unlimited, it won't make you $10,000 a contract if the market crashes. It's just it's just trying to make a quick little 3 or 4X if you can get it to pull back, to 575. But the good thing is it doesn't have to go all the way to 575. It can go to 580 or 570 or 560, and you still have potential to make, $500 on $90 risk. Anyway, we'll see. Now that one expires Tuesday. That one may be $90 down the drain also. I think that we have a good one going in here somewhere. I'm really proud of this one right here, this target, and this one's worked out. And I showed this one a long time ago, and it's getting ready to expire. So are a bunch of these. So these are ones we've been working on for a long time. And there's a tail hedge at $132. That one's probably money down the drain. Anyway, this one right here, though, a long time ago, we looked at Tesla, and it overshot. And I went out where the market makers thought it was going to move, but I was trying to show how to buy the dip and not just go for unlimited money, but how to load up on an area. And we're trying to make like a 4 or 5x. Well, I think what was the target? I guess 320. The target's where the middle wing is. Well, it overshot. $1,000 risk. It's worth $1,800 right now. It should be interesting. Doesn't expire till the end of this week. But look, just this week, look at the time decay hit. This is Monday. You can see that growing towards the tent. By Thursday, it's like that. But also the same thing, by the same token, if the market keeps going up and it goes right here to 360, you get the consolation prize, which is just the credit. And that would be kind of disappointing, but I mean, I should have moved the strike. What are you going to do? A person could either pray the market pulls back or just take it off now. So if it does keep going up, you don't have to take the consolation prize. Even though $400 credit on $1,000 risk, I mean, what kind of easy, and I know it's hindsight, but this is an easy way to buy the dip in hindsight. And I love these. I love using broken wing butterflies for directional trades sometimes. All right, guys. Well, I'll stop filibustering. I don't think there's anything else to look at. We have an Oklo earnings idea. That's a liquid. Well, no, that one doesn't expire for 33. Core weave. I did this one in the wrong week. I wanted to tell you guys about this. Somebody asked me, hey, do a core weave one. And we got the wrong expiration. But anyway, it's a winner. If you did that, I guess just take it off. But anyway, for this week, all we have on so far is Snowflake. So we'll see how it goes. It's down $19 right now, but that's its profit loss at expiration. Here's its profit loss right now. Here's its profit loss by the end of the day tomorrow, Tuesday, Wednesday, Thursday, Friday. All right, guys. Well, I appreciate y'all for being here, all 7 of you. It means a lot to me that you guys are here this late, and I will see you back here in the morning. You guys have a wonderful evening. All right, see you.